The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start the show with the most popular stock in the world, Apple. This is a long-term weekly chart that we're looking at here, and as you can see, we are in the midst of a down move. We were down the whole year, well, especially after May, and as you can see, this as some strong support. Now, the reason why I've marked it here with the green trend line is if you go back and look to where we were in 2013, you'll notice we had that same type of a double bottom where point C was a 786 retracement of point D. This is different this time, and the reason why is the long-term structure of the market. Once we hit that 2134 in the S&P, that completed that 5-point reverse point wave pattern that is what that's controlling us, and that's one of the reasons why I think we're in a bearish mode right now. But the ABCD structure on Apple that we're looking at right here measures to 72, so that's another 30% lower than where we are right now. And I do believe that we're going to be in a multi-year bear market, because we haven't had a multi-year bear market. I mean, we had in 2000, we topped and then we bottomed in 2002. I believe that was down 2 or 3 years. 2007 to 2009 was just under 2 years, and that's all we really had. We haven't been in an area like we were, back in the 70s, where we were in a bear market for well over 8 years, from 1974 into 1982. I believe we're going to see one of those, and the people that are around have not been exposed to something like that. And that's just the way it goes. Some days it's chicken salad, some days it's coleslaw. You just never know. So that's what it looks like anyway in Apple, that we're going to be heading towards the 72 level. Now let's take a look at what's happening in the market right now. In other words, we've been watching this stock market top. It's had some pretty good breaks, and now we want to see where we are at the present situation. And I think what we'll do is we'll look at the Dow Jones E-Mini to start out with here. It's a good one. This S&P looks pretty much the same. We'll probably post it also, but I wanted to start with the Dow Jones E-Mini because it shows some real interesting things. You'll notice that the 61% retracement was down there at 62.83, and then Sunday night, if you recall, we were down 100 because of what was happening in China again, and also what was happening in the Hang Seng, and of course the market rallied now. But what's interesting now, and this is something that we've been quiet 3 to 5 day rally coming into either today or tomorrow. Now the price levels that we're looking at here on the Dow are around the 16,650, about 200 points from where we are right now. That's a 382 retracement of the high that we made back in late December, and that's the one that you have to count, because that's where the really big break took effect. So that tells you that at least that tells me that that's the cycle that is actually operating in the market. Now remember, folks, these are just patterns. I don't know diddly squat about the fundamentals of the earnings, and I know there's lots of earnings coming out, and the earnings will give us a good idea, because if you get a stock that has really good earnings and it doesn't go up, you can kiss that puppy goodbye, because if good news does not make something go up, it only has one way to go, and that is to the downside. So we want to watch that kind of closely, I would think. Now this is a chart that we looked at. That's not the one I wanted to show you, but let's just move it over here. I've got a really nice chart here on Oh, shucks, where is it? Oh dear. Oh, isn't it me? Here's the one I wanted to see. Here's the Nasdaq. Okay, that's the one I wanted to show you because it's even more clear than the Dow Jones E-Mini. And this includes the gap on Sunday night. You'll notice that we broke down, but this is one day off. I haven't updated it as of yet. But Sunday night, we hit that 61% retracement. Absolutely spot on. I mean, at 42.17, and now we're having the quiet 3-day rally. That 3 to 5 day rally is what we're looking at, and that lines up to what Shane Smolian showed us when he looked at the planetary speeds of the planets. You know, using Mercury and Venus and Mars, and it's Mercury and Venus because they're faster moving and you get lots of hits, and so those are the ones that give you a better indication for shorter term. So we should be rallying for a very, very short term. Now, in really good bear markets, well, if you think a bear market is good, and if you're bearish, it is good. But in bear markets, you're only going to get about a very quick 3 to 5 day rally at the very most. And this time we're looking for it to come in either today or tomorrow. And then we will see, what we're looking at. Now, the price level yesterday, we were watching the 1940 level. We hit that. We backed all the way off to 1907, and then we came back and we took that out by a little bit, and we tested it again today. So it's having to struggle around the 382 level. Now, this morning, the S&P cash, because it was closed after the big rally that we had last night in the S&P, it will make the 382 retracement, where we didn't make that yesterday in the cash, but we will make it today. So it's actually building its way up to see what's going on. We've had a request to have Bill Meridian on, and I will get in touch with Bill this afternoon and see what his schedule. Then we want to watch what he's doing, and I will do that this afternoon. And we will have Rich Anderson on next week. I believe he's traveling these next 2 days, getting out of the cold weather, and then we'll watch what's going on with those two fellows. But we'll certainly have Bill Meridian on as soon as possible. And he enjoys coming on. I've known Bill for a very, very long time, and First met him. Well, I met him and Norman about the same time, way back in '82 or '83, I believe. Wow, 35 years ago. Some of these guys I've known Rich since he was about 3 years. Let's take a look now at the longer-term cycle work that someone sent us from the den that just shows you the cycles. This is something that I wanted to try to clarify because I've had several questions about this. Now, what you're going to see on this chart, and this is not for me, this is from someone else, but it's going to give an example of what I'm going to try to show you. You'll notice that the big cycles that are here, you'll see them. He has a primary cycle, then he has a secondary cycle, and then he has the smaller tertiary cycles that are there, and he lines them up. And what they do, you try to get them to come together all at the same time, as you can see here on the far right side. That's known as, what was that? I'll think of it in a second. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
The old gray matter. We're back, folks, and the old gray matter finally kicked in. The word I was trying to think of was synchronicity. When Jim Hurst came out with his book in 1972, there were 4 or 5 principles of cycles that he dealt with. Nominality, which meant that there were certain nominal cycles that existed in the stock market. Mainly it was the 18-day and 36-day cycle that was there. Those were trading days. And then they had periodicity where they would hit at certain periods in time. In other words, they would hit together once or twice. And then synchronicity is when they all synced up together. And that's the main thing that we're trying to do here. And the best thing of the book, and believe me, the nominality, yeah, that's okay, but the synchronicity, that stuff is based on astrology. I believe that 1,000%. Periodicity, I don't even think that exists because the markets expand and contract too much. And that's what we're seeing here on this gold chart. If you'll notice the cycle lows that we start here back in November, they hit pretty nicely in the middle of December. And you'll notice the high translation effect. In other words, the cycle high crest in the early part of the cycle in the first 2. In fact, all the first 3, if you'll notice that, all 3 of them. And then the second 2, which are different because it's tightened up. That's where the the periodicity fails, because it's got to be based on something that's astroharmonic, and I believe that I know that that's the case because of the major spots in the market that we've hit through the years. These are all just such big planetary events that you cannot if you cannot forget that or disallow it. I mean, look at November or March the 9th. Well, you can look at any of them, I don't care. But anyway, if you'll notice that the highs of the 1.27 and the 1.618 pointed up there to that large ABCD pattern that we had just recently. Now, what's interesting about this hourly chart that we're looking at here, you'll notice that it crested in the middle of the cycle this time. That's a bullish phenomenon, see, because now the market has it's going up as much as it's coming down. That means that it's getting more and more bullish. So we got a potential bottom here either today or tomorrow in the gold, somewhere between, I believe, the 1078 and the 1068 level is what I think will happen, and then we'll see if we get a move up. So that's just my my 2 cents worth on cycle theory. Frankly, the patterns, are very, very good at pinpointing some of these times. But the time cycles, they shift back and forth. Usually, just after 2 or 3 hits, they hardly go 4 hits. Where you get 4 cycles in a row. That almost never happens because they start to expand and contract. Why they disappear and stuff? I believe the answer is it's because there's a bigger cycles out there that are based on these planetary phenomenons, that I've looked at, and that's pretty much how I view it as looking at some of these things that I'm following. So I hope that's it's a good thing. That's why one of my favorite songs by the Beach Boys, of course, is Good Vibrations. And of course, one of my second is Help Me Rhonda. Okay, let's get back to the gold market here, because I wanted to show you the fact that we got a canary in the wood pile in this darn gold market, and that canary happens to be silver. You'll notice the weakness in the silver that we've had. We pointed this out last week when we were making new highs in the gold up around that 1113 area, and silver couldn't even take out the highs of last Christmas. So that's another sign. And now we've gone down and from the technical point of view, we're also having the same type of a problem in the platinum market. The platinum, which had been a pretty good leader, gave up all of its gains in a matter of just a few days, and that was telling us that I can put this up here and let you folks take a look at that, because we're down now testing that 3 drive to a bottom pattern that we had in platinum. So we're getting very, very close to what's going on there, because it's got to hold. Because if we break that 1810 level, that means we're heading down a whole lot lower in the platinum, and then most probably in gold and silver, because the commodities have still been going down. Yesterday we had a grain report, and the markets had a pretty good rally. We rallied about 25 cents in beans and about 20 cents in wheat, and about 15 cents in corn. And of course they gave most of that back already, but we're getting close in the grains. It's just not quite ready yet. I believe it'll be sometime around that big astro event that we're going to have. The next big one will be around the 22nd or 23rd. So that's the main thing to look at. A question about the stock market. The reason why I'm bringing this information, what I think is information, well, it's information. The question is whether it's good or not. That's it. That's the big key on the market, is because bear markets are more difficult to trade, and the reason for that is you don't see them very often. They're really you'll see them in the grains and other things, but they all act the same. You'll have these vicious breaks like we've had in the S&P and the Dow. The Dow dropped several thousand points in a matter of a few days. And that's not a good sign, boys and girls. No matter how you look at it, it's not a good sign. Now, the news that you'll get out of the TV will be that the earnings are good and everything's okay, and they disregard it. But remember, we're technicians, and technicians don't listen to that kind of stuff. So you have to rely on what the charts are trying to tell us, and the charts are telling us that we had a big move down. We stopped exactly at the 61% retracement in the S&P 500. We stopped exactly at the 61% retracement in the Nasdaq, and now we're having a quiet 3 to 5 day rally, and that's what we've been expecting, and that's what's happening. So the areas to look at now on the S&P 500 will be the 1955 level. That will be the bigger 382 of the whole move down. And then we have another level just above that, which is 1965. So I'm assuming between 1955 and 1965 I'm going to go with the 1955. And the next one would be above that. Then I'll probably be all wrong, and we might get more of a rally. I'm not sure. But these markets have rolled over big time. They're yelling and screaming, sell me, sell me, sell me. And remember, Bernard Baruch, in his book, my own story, his autobiography, he says that the greatest scam in the stock market is to inflate things to a high price, and you'll get suckers to buy it all the way down. And if you stop and think of some of the ones in the past, like Juniper Networks and Enron and et cetera, Global Crossing, I mean, all of those, just absolute total farces. You've got to be able to realize that this can actually happen. Now, I wanted to share an old chart going back because we have a lot of. This was on President Clinton's birthday. It happens to be my baby daughter Jilly's birthday, August 19th. And you'll notice here the timing of the this 5-point reverse point wave comes in exactly at 21:34. We'll discuss the numbers behind that when we get back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look now at this chart that Elliott Wave theorists put out on August the 19th of last year. You notice that the high day, Oliver Winsky day, when we had Mercury going retrograde and we had a new moon on that day. And as you remember, Norm was there telling that that was it. And sure enough, that has been it. So we'll see what happens. And he called for a bottom on the 11th. We've had that. And we're having a little 3-day rally. and we'll see how that comes up. Now, the thing to watch for, let's finish talking about this chart here, because I think it's very important to go over a little history. Back in 1995, Ralph Alcampura, one of the very best technical guys that we know, he was with he's still around, of course, but he's retired. He was talking about a 10,000 Dow, and the Dow was trading around 7,000, as I recall. And his boss, when the Dow hit 10,000, gave him a bonus of a 1962 red Corvette convertible with the license plates 10,000 Dow. And of course, that car is worth about 90 grand. And I met Ralph a couple years ago in New York. I've known him for quite a while. And I asked him, and he said, "Are you kidding me?" He said, "90,000 for a car I can't even drive." He said, "Nope." He said, "I put it away for the grandkids' education." So who knows? Anyway, what we're going to look at here is when you hit that 2134 in time, in other words, 89 months, 91 months from high to high, and it was spot on to the day. But the 2134 was even more important because it was 1.618 expansion of the move from 2007 to 2009. And it was also a Fibonacci number from 2000 and also 2009. So that was telling us why that number was so important. Those of you that have been on the air here for quite some time, they heard me, talk about that number all the time, every day, just like I do, beating my chops here about how bearish the market is right now. That's pretty much what I'm doing. The same thing here is to try to alert you, to what's going on, to some of these things that we see happening, and we'll get to that a little bit later. But I believe very, very strongly we've rallied 50 handles off the bottom. I feel very strongly that this is nothing more than a bear market rally. And if you stop and think, folks, we hit that fib number perfectly on Sunday, and now we're the third day into the rally. Before, when we hit those numbers, we were out of there like a rocket ship. I mean, we were off to the races, and we're not doing it this time. But the thing to watch for is, if I am correct, what's going to happen is you're going to have, maybe it's an outlier event to come into the market. I don't know, maybe be something like President Obama resigning. Well, that would make the market rally. But anyway, that's just a bad joke. Okay, when you see a wide bar down, and then if you're watching hourlies or dailies, if you see a really wide bar down in the stock market, much like we had on the way down, one of these really wide bar downs where we take out the lows of Sunday night, which came in on the 11th at 1892. We're trading at 1939 right now, so we're 50 handles above that. So the thing that we want to watch is, if it does that, that's telling us that the second leg of this next part of this bear market has started down. And the first leg was well over 120 points, S&P points down, way over that. I don't know the exact figure, but it's a big number. And that'll take us down near the August 24th lows, when the S&P hit, the 1838. When we take out 1838, there's not going to be any question in anybody's mind on Wall Street that this is no longer a bull market correction. This is a full-fledged bear market. Now, they won't recognize it as such, most probably, because people don't like to hear negative things. And and that's not necessarily negative. That's just the fact that the market is just, taking care of its excesses, the way I look at it. But we'll have to wait and see. Someone asked me to give a probability of this being a bear market, and I have to give it the ivory soap seal of approval. 99.9%. I'm sure of that. That's how strongly and I don't know how much it could rally from here. But I can tell you that this very, very negative thing that we have going on in these markets, that would be pretty, that would be something. Anyway, we'll see what goes on with some of these things that we have going on here. And we got one of our favorite people in the room here, Mr. Z. What it be?
Mr. Pesavento, it's so good to listen to you each day.
I don't know how you put up with it, but go ahead.
Yeah. I'd like to interject a very specific question right on this topic about the longer term on stocks. Given your experience over the years, can you? I'm struggling, or I'm not struggling, but I know lots of people are struggling with the following idea. Yeah, it's clear the stock market has made a top of some sort, and conceivably something more sizable decline-wise is in front of us. But the temptation is to take profits and then hope that you get a good bounce to resell into. Is there anything that you can share with us, looking at the action here in the past month, past 2 weeks, that suggests to you that now is the time not to avoid attempting being nimble, and in fact just hang with either your short positions or flat in cash?
Yes, John, I tell you, that's one of W.D. Gann's rules that I had the most trouble with, and that is, never get out of your position. Amos Hofstadter was another one that really believed that, and the way Amos did, and I met Amos a couple times, he would liquidate some of his position, but he always kept a core position. In other words, his base position that he added to several times, he might take part of it off. And Amos was a fantastic technician, and he was surrounded by great technicians there at Commodity Corporation. But he believed that you should have a basically core position, and part of the reason is because of an outlier event coming in. And he didn't, they didn't do stock indices at Commodity Corp way back in the 60s and 70s. They were strictly a commodity house, and the best there is, and Goldman Sachs bought them for billions of dollars years back in 95, I believe, just to get their automatic trading program. But he believed that you just have a core position on, and if you stop and think, if you shorted that S&P up around say 21 or 2090, and now we're trading at 1938, you're up 160 points and you still have your position in. If you look at your net equity, you made a great deal. Now this 50 points is taking something away from it, but you're still in your position. And you could be getting ready to add, or add on a move down, and that's what Amos did. Amos added on weakness after a rally. In other words, he would wait for the C leg to come up and then add on the rally. Stay with us, John. We got a break coming up. Okay.
Very good. Thank you.
Bet.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, and we have Mr. Z from Philadelphia on, and we're talking about holding a core position in the markets, and that's a very important thing. Now, if you recall, I'm sure you know these statistics, John, but in this past bull market that we had, if you would have missed the best 25 days in the market over the past 6 years, you basically have a negative return.
Right.
You know, that's a very startling figure. And when you stop and think that we have as many up days as we do down days, you know, that's the advantage of having a core position.
Indeed. And just applied to the current situation, Larry, I'd make the observation, having broken down to 1900, 1895 on the S&P futures, I observe that the low that occurred last Monday, be Monday the 4th at 1980, was right in the same neighborhood of the low back on that Monday. I think it was December 14th, like 1982, 83. And I would just observe that, you know, the little double low there that then was busted, and any bounce that that comes up but doesn't exceed that level would be just a strong signal to me that the larger trend is down. In other words, with a core position, you'd want to stay short or not be long unless you got over that 1980, 83 area. So, but that situation you've described with Amos, what have you, I think that's vital to understand and to employ when we have clues that the trend has turned for us. So.
Yeah, I agree. And the thing that I try to do is the folks at TFNN, we have so many of them that have, you know, 401ks, and they're not traders, they're more investors, is to warn them of this. And I've been doing that for the last couple of months about the danger of being long up in here. Fortunately, some of them have taken it, the advice and lightened up.
Indeed, indeed. Well, thanks so much for your input. Really appreciate it.
Son of a gun. I don't know if they can still hear me on TFNN or not. 10-4. Huh. I don't know. Let's double check here. Oh, I'm still on. Good. Okay. Well, we lost Mr. Z, unfortunately, and he's one of our favorite people to have on because, boy, he certainly understands the market. He's been around. So he and I and Moses were in the
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, and we're going to talk a little bit about the oil market, folks. I posted a couple charts in here to Tiger TV. One is the heating oil on a weekly basis, and you'll see the Thunderbolt pattern, also known as the ABCD pattern. It's absolutely spot on. Heating oil has already started to move up, and that's another one. The second one that I've posted in here into Tiger TV is a chart of gasoline futures, and you'll also see the multiple ABCD patterns that are there, and it also has rallied about 5 cents a gallon already to the same thing. Now, I will update these charts here so that we can let the folks see them, because I think we might have missed a few due to the poor connection that we might have had. But we'll show the heating oil first, and you'll see the big ABCD pattern down into that level. And then the next one we're going to show is the gasoline. And all I have to do is to find the gasoline, and I just had the gasoline right here. So we'll see what I did with the gasoline. Anyway, it's a nice one too. Here it is. We'll bring it up here and we'll take a look at it. And we'll look at it right here, and we'll move it over a little bit so everybody can see it. And then we will move this up so I can put it into the room. Okay, there we go. Anyway, that's what we're looking at in the gasoline over the last. Got beautiful 3 drive to a bottom pattern. This is really, I think this is a major bottom coming in here, folks. It's still a bear market, but we could get one heck of a rally. You know, the last time we had one of these, we rallied $4 a barrel in oil. We went from 34 to 38, and we could rally $10 or $15 a barrel off of this one, and it's still bearish. But that's a considerable amount of money on the thing, and I give this another really high probability of working. I mean, it's got everything lined up that you could possibly ask for in this. So keep an eye on it. That's the primary thing to look at. What's amazing is the market, every time we open sharply higher, it sells off, and all we did on the S&P is we rallied up to the 786 of the overnight range that we had from 1945 down to 1932, and then we rallied up to the 786 retracement of that. So in order to get this market to move anymore, we need to get it above the 1955 level, which would be an ideal selling point to be looking at it. But remember, anytime, I believe if we go below 1909 now, if we go below yesterday's low, I believe that would be the trigger that would tell us we're probably getting ready to have another massive wave down because the overall bearishness of the markets, all global markets, folks. It's not just the U.S. The DAX has done the same thing, and so have our markets in Asia. They're all very, very negative, and we have negative commodity prices still. I mean, even though we've got gold off the bottom a little bit, we've got silver and platinum and copper. I mean, copper looks like a dying quail. It's under $1.95. So all of this is telling us that we're having a pretty big bear market. So you want to try to participate in this, or at least protect yourself and your 401ks, because if you've got some cash on hand, you can buy a lot of things. And that's where Mr. Kennedy, Joe Kennedy, JFK's father, he made his big fortune. He was rich, but he got very, very rich during the Depression because he was so heavily in cash. He bought the Merchandise Mart in Chicago for, I believe, 10 cents on the dollar. I think he paid $900,000 for it. It was the largest building in the U.S. for many, many years. And he bought it in, I think, 1932 or 1933 at 10 cents on the dollar. And when JFK was, getting ready to run for Senate, that building was paying him more than that every month in lease fees. I mean, you talk about a good investment. I don't know when they sold it a few years later, but that was one of the better investments that you could possibly ask for, to hold it for 35 years and to get that type of return on it. But sometimes when you have cash on hand, you're able to buy things at a cheap price, and that's a good thing also. But you don't want to get caught in these down moves in stocks because they can be incredibly vicious. And we'll see. Now, whether someone's asked me whether there could be a flight to quality in the gold market, I think so, because I don't think a flight to quality in the bond market is in the cards, because that's where the real problem lies. It's in the bond market, not in the stock market. The stock market is basically a mask that they're trying to get you involved with this stuff, and the real problem's in the debt market, because this is a market that's many, many, many times bigger than the stock market, and that's where the real problem lies. We've got negative interest rates. Are you kidding me? Are you kidding me? Give me a break. I mean, that's something that's never happened in history. It'll probably never happen again, but that's where the real problem lies. And bonds are just in a really tight trading range between 163 and 153. But I believe we're going to see the same thing happen in bonds that we had happen in in the stock market. In the 1970s, bonds were selling for 55% of the value, because they were selling with a 12% premium, because we had really high inflation, and a 6% 30-year Treasury bond was selling for $5,500. And eventually that thing went to 160 over 32 years. But things have changed now, and we're going to get back to, I think, what normal markets, if there is such a thing as a normal market, they will get back to what normal markets usually do. So the main ones to watch is a big down move here in stocks if we take out the 1909 with a long ranging bar, and that would certainly do that if we did that today or tomorrow. And then also we want to talk more about the possibility of the oil markets bottoming because of the bottom we see in heating oil, gasoline, and then also in crude oil. Crude oil made a 1.618 expansion on the long-term charts yesterday at 29.93, and that was the low. 29.93 was the exact number, and I love that number. So who knows? Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.